Assalamualaikum warahmatullahi wabarakatuh. I'm Renita Kamaliti, an accounting student class F. Now, I'd like to explain you about long-term liability. Long-term liability include 5 subtopics that are notes payable, mortgage payable, lease obligations, bonds payable, and deferred income tax. Okay, let's begin. Long-term liabilities. Long-term liabilities are existing obligations or debts due after 1 year or operating cycle, whichever is longer. They appear on the balance sheet after total current liabilities and before owner's equity. Example of long-term liabilities are notes payable, mortgage payable, obligation under long-term capital leases, bond payable, pension and other post-employment benefit obligations, and deferred income tax. Quick is talking about notes payable. Notes payable represent obligations to banks or other creditors based on formal written agreements. A specific interest rate is usually identified in agreement. Following the matching principle, if interest is owed but has not been paid, it's accrued prior to the preparation of the financial statements. Assume the floor lady is signed a $10,000 3 year note with an interest of 10% on July 1 in exchange for a piece of equipment. The interest is due and payable quarterly on October 1, January, 1 April, and 1 July. The floor lady operates on a calendar year basis and issues financial statements at the end of each quarter. A long-term note payable must be recorded as of July 1, with interest accrued at the end of each quarter. And so the second subtopic, we talk about mortgage payable. The long-term financial use to purchase property is called a mortgage payable. The property itself serves as collateral for the mortgage until it is paid off. A mortgage usually requires equal payments consisting of principal and interest throughout its term. The early payments consist of more interest than principal. Over the life of the mortgage, the portion of each payment that represents principal increases and the interest portion decreases. This decrease occurs because interest is calculated on the outstanding principal balance that declines as payments are made. And then we turn to the third subtopic. It's about lease obligations. In a lease, the property owner gives the right to use property to the third party in exchange for a series of rental payments. The accounting for lease obligations is determined based on the substance of the transaction. And then we turn to the fourth subtopic. We talk about bond payable. One source of financial available to corporations is long-term bond. Bonds represent an obligation to repay a principal amount of a future date and pay interest, usually on a semi-annual basis. Unlike notes payable, which normally represent an amount owed to one lender, a large number of bonds are normally issued at the same time to different lenders. These lenders, also known as investors, may sell their bonds to another investor prior to their maturity. There are some types of bonds that are serial bonds, sinking fund bonds, convertible bonds, registered bonds, bearer bonds, secured bonds, and debenture bonds. And the last topic is deferred income tax. Many companies report different amounts of income on their income statement on their income tax return. This difference occurs because the definition in income is not the same under GAAP or generally accepted accounting principles and federal income tax regulation. GAAP requires income tax expense to be calculated on income before tax on the income statement, while the tax return calculates tax due based on tax income per the income tax return. If the differences are considered temporary, in other words, if certain revenues and or expenses are reported in different years in income statement and or income tax return, an asset or liability called deferred income tax exists. If deferred income tax represents the portion of the income tax expense that will be paid in the future years, a long-term liability called deferred tax is recorded on the balance sheet. And so, that's all about my explanation. I hope this video might be useful for you. And thank you for watching. Wassalamualaikum warahmatullahi wabarakatuh.